cryptocurrency and its impact on the global economy. The macroeconomic effects of cryptocurrencies and stablecoins have been thoroughly examined by the Digital Currency Governance Consortium of the World Economic Forum. Concern over the potential negative consequences of cryptocurrencies and stablecoins on the financial system catalyzed this study. Because of this, crypto legislation and protections are high on many people's agendas. While the European Council had recently passed the Markets in Crypto Assets (MiCA) regulation, the White House in the United States has produced several papers this year. Given the different high-level regulatory courses that cryptocurrency and stablecoins could follow, our research tried to estimate their economic results. To help decision-makers in these dynamic environments, we aim to provide projections to corporate and governmental leaders. Cryptocurrency is a social, cultural, and technological advancement that goes far beyond financial innovation. Cryptocurrencies can significantly boost the economy due to their openness. Digital assets governed by cryptographic methods are called cryptocurrencies. Different cryptocurrency subtypes exist. The most well-known cryptocurrency is arguably Bitcoin, BTC, although countless more have appeared over time. Naturally, stablecoins are also included here, which are digital currencies whose value is tied to things like fiat money, debt paper, or commodities like gold. It's crucial to take a moment to calm yourself and realize that the larger impact of cryptocurrencies goes beyond daily price swings when cryptocurrency prices are correcting and the fear and greed index rebounds. Blockchain technologies, which underlie use cases for cryptocurrencies, are developing at an exponential rate. The enormous economic influence of cryptocurrencies on the world economy spans industries, transcends borders, and goes beyond what was previously unthinkable. Like every tool or technology, cryptocurrencies have advantages and disadvantages. The advantages of cryptocurrencies are significant. Possibly one of the best benefits is accessibility. Without the involvement of other parties like banks, one can send or receive payments using cryptocurrency. It might be argued that the status quo of the existing financial system has failed many people all over the world. There are almost 1.7 billion people worldwide without a bank account. Cryptocurrencies may promote financial inclusion globally due to their accessibility. The usage of cryptocurrencies gives a chance for financial inclusion for underserved and unbanked communities, of which 1 billion have mobile phones. Consequently, it is possible to claim that cryptocurrencies are inherently beneficial to the economy. How can cryptocurrency guard against inflation? Depending on your position, you may be able to determine whether cryptocurrencies, notably BTC, safeguard against inflation. Some people can decide to exclusively work with stablecoins that have strong backing. Historically, cryptocurrencies like BTC have been viewed as inflation hedges. BTC's decentralized nature and limited quantity are said to have contributed to its rising value over time, both for coins that are already in circulation and those that have yet to be produced. Some people may be wondering if BTC lives up to the lofty aspirations of financial inclusion and hedging against inflation given the current state of falling cryptocurrency values and high inflation rates. It would be useful to make a distinction between owning and using Bitcoin. Do you regard BTC as an investment tool that may potentially suit the needs of a real economy as a method of payment, or do you see it as a haven from inflation? Depending on the response, one can determine whether cryptocurrencies function as hedges. Alternatives are important as well. Some people can decide to exclusively work with stablecoins that have strong backing. Additionally, whether one views cryptocurrencies as genuine alternatives to failed monetary policy will determine if they are effective means of escaping growing inflation. A BTC maximalist may contend that post-1971 and most definitely post-2008, allowing for a non-fixed money supply has shown to not correspond with the necessities of a real economy. Global inflation rates that are out of control may increase interest in and demand for cryptocurrencies. The advantages of cryptocurrencies over fiat and their usability are particularly important in nations that have seen their currencies devalue by at least 50% relative to the US dollar over the last 10 years. Consider Argentina, Suriname, Turkey, Lebanon, and Venezuela. Comparing residents of those nations to those who had inflation of less than 50% during the same period, people in those nations were more than 5 times more likely to say they intend to use cryptocurrency. Exist any issues with cryptocurrencies? There are stories concerning cryptocurrencies that emphasize their usage in illegal activities, their allegedly negative effects on the environment, and the economic effects associated with them, and their erratic character. It's hardly surprising that some cyber criminals use Bitcoin because it functions similarly to cash. The amount of illicit activity in total cryptocurrency transactions is very small, accounting for just 0.15% of total transactions in 2021, even though legitimate cryptocurrency usage is growing much faster than illicit activity. Next, it is asserted that cryptocurrencies are harmful to the environment. It is specifically claimed that the proof-of-work (POW) consensus mechanism used by BTC has detrimental economic and environmental effects. Estimating studies, however, reveal that BTC contributes 0.08% of the world's CO2 emissions. In exchange, BTC encourages an entire industry and the financial inclusion of millions of people worldwide. Another drawback is the volatility that most cryptocurrencies have to deal with. As a result, some currencies can depreciate quickly. According to economists who frequently view money through a traditional lens, cryptocurrencies are therefore inappropriate as a form of payment and expose users to higher risks. Another claim made by economists is that since no business entities or central banks are involved, the value of cryptocurrencies is not guaranteed. A central bank digital currency, CBDC, may be considered a viable option by economists as long as the central bank retains control over governance. Without a doubt, the cryptocurrency markets can be incredibly volatile and chaotic, yet when viewed from a distance, it seems as though there is an underlying logic at play. For example, comparing the logarithmic chart of BTC to its linear chart reveals that volatility and drawdowns have remained largely constant throughout time. Will cryptocurrencies endure a downturn in the economy? Despite the current crypto cold, it is possible that cryptocurrency pricing, industry advancements, and innovation are all improving one another through a positive feedback loop. The decline in traditional markets and geopolitical reasons may be related to the negative pressure in the cryptocurrency markets. Investors in cryptocurrencies go through challenging times. The state of the economy has significantly changed. For instance, high inflation is forcing central banks to change their strategies by raising interest rates, which ensures a tighter financial market. Bond investments, for instance, become more appealing as a result of the rising interest rates. Risk aversion tactics are also reducing investments in cryptocurrencies when the stock markets experience a slump. When referring to the prices of digital assets on crypto exchanges, the phrase crypto winter is frequently used. This is meant to be understood as something like a bear market cycle in the stock market. The winter has certain unpleasant, personal effects. For instance, some businesses involved in the crypto industry have begun laying off employees to reduce costs. Institutionalization is shown by the cryptocurrency market capitalization's correlation with the traditional markets, but this is not always a bad thing. It suggests that the adoption and acceptance of cryptocurrencies and their underlying technological underpinning are the first stages toward greater acceptance. Eminent thinking leaders contend that the Bitcoin industry evolves in cycles, which can seem chaotic from the outside. However, in practice, there is an underlying logic that links prices, industrial advancements, and innovation in a positive feedback cycle. What effects do investments in cryptocurrencies have on the overall crypto economy? Even though the cryptocurrency market seems to be expanding in a positive feedback loop, unexpected events may nevertheless have an impact on the trajectory of the ecosystem as a whole. Even though blockchain and cryptocurrencies are essentially trustless technology, trust is still essential where people interact with one another. The cryptocurrency market not only has an impact on the overall economy, but it also has the potential to have significant repercussions on its own. The Terra instance demonstrates that any organization, whether it be a single business, a venture capital firm, or a project generating an algorithmic stablecoin, can cause or contribute to a boom or bust of the cryptocurrency markets. The subsequent falls of Celsius and Three Arrows Capital and the systemic implications of such crypto-native events that resemble traditional finance domino effects all show that the crypto economy is not immune to setbacks. The crypto industry does not have institutions that are too large to fail, in contrast to traditional finance. It's always simple to look back, but the Terra project was fundamentally faulty and eventually unworkable. However, because so many initiatives, venture funds, and established companies were exposed and negatively impacted, its failure had a systemic effect. It suggests that considering risks and rewards is the key to successful cryptocurrency investment. We appreciate your viewing, and we hope you enjoyed the video. How was the video? Did you enjoy it? Post your feedback in our comment section below and subscribe to our YouTube channel for more updates.